Let us all celebrate. Bitcoin has finally hit the 100K. It's even at 103K now. Does it make sense to sell? The question is always, when should we sell? When should we lock in the profit? We don't want to be just paper millionaires, right? When we buy low, we also have to sell high at one point. When are we high enough to sell? Let's have a look at some metrics most people aren't considering. Because the hard part is really in the selling, it's not in the buying. Buying cheaply is relatively easy because nobody is looking, there is no real social pressure. You can simply just buy and allocate, and the amounts that are invested aren't really that important. Once we go 3, 4, 5x, the amounts get much higher, and at the same time everybody around us is hyper bullish. So then we have to be actually contrarian. The art though is to figure out when to sell, and this is what this video is all about. Now here is the price currently, 103K, very, very pretty. And it's not even a surprise for us that crypto prices are expanding. We've actually anticipated this since October of last year. And if you've been following this channel for a while, you know that I really like to look at this chart. This is the stablecoin market cap of various stablecoins, DAI, Tether, USDC, BUSD. And it shows very nicely how the market sometimes expands and how it sometimes contracts. Of course, the stablecoin market cap is going up when there's fiat flowing into crypto. So when people deposit their fiat with a stablecoin issuer, and then the stablecoin issuer issues those tokens on the chain, we can see that issuance over here in the chart. We see how this is very nicely expanding extremely quickly recently. And we can also see the turnaround since October of last year. What happened over here with the crash? That was the implosion of Terra Luna, of the anchor protocol of the UST stablecoin. And during that bear market, FTX also imploded. But since October of last year, we are in a bull market. And I talked about this in October of last year as well here on this channel. So if you don't want to miss those kinds of critical turnarounds, feel free to subscribe over here. I publish videos on Bitcoin and on various meme coins regularly on this channel. Now the stablecoin market cap expansion is of course one driver, because when there's money flowing from fiat into crypto, of course crypto prices have to go up. But there's also a second driver, and that's the Bitcoin ETF. So Wall Street is now buying Bitcoin through the ETF with custodian Coinbase. And especially in the last weeks, we have mainly seen net inflows. There were only a few days where we had outflows. Most of the days we have seen inflows. And that's very different to the beginning, because at the beginning, we've seen all of those outflows from the Grayscale Bitcoin Trust. Saw a lot of its customers convert to the cheaper alternatives with the ETF launch. The Grayscale Bitcoin Trust was a proxy for Bitcoin before there was the official ETF. And the management fees for that trust are pretty high. So then people simply just swapped into the thing that tracks Bitcoin better and that has lower fees. And so if we annualize the ETF demand in the last 14 days, if we pretend that the last 14 days are representative of what's going to happen in the next year, then we have a supply absorption through those ETFs by 3.9%. So 3.9% of the entire Bitcoin supply will be bought up through those ETFs. Currently, 5.4% of all of Bitcoin supply is held by the ETFs. So the ETF holding will almost double in 12 months if we continue at the current rate of purchases. Ethereum, by the way, also sees quite nice inflows right now, 5.9% annualized. And that hasn't always been the case. This is only an acceleration recently with this bull market. Now this all explains quite well what has happened, but this does not explain when we should sell. And this is what this video is actually about. Selling is much, much harder than buying, because when we buy, it's actually pretty easy to buy low. Nobody else is looking. There is no social pressure. We can simply allocate a small amount every month and we are buying Bitcoin low. Once we have our 3, 4, 5x return from those purchases, we have two hard headwinds here. The first headwind is that now the amounts that we have to sell are way, way higher compared to what we dollar cost averaged in with, because first of all, we went up by 5x, but because we also have to sell much quicker than we buy, we tend to be at those lower prices for a much longer period of time than we tend to be at the higher prices. That's the first problem. The second problem is that there's now also social pressure, because when the price is low, there's only the hardcore crypto fans that still follow crypto, right? All the tourists are gone. They have simply lost their money and they don't come back. But once the price is high, everybody around us is hyper bullish. So when we sell, we have to be way more contrarian. There's way more money on the line, but we also have to be way, way stronger against the grain. Now, all of this does not mean that I advocate for selling Bitcoin right now. But what I do advocate for is to have a system, somewhat of an approach that gives a reliable selling signal for the future that potentially also worked in the past. So it's not just gut feel, it's ideally something that's quantifiable. And so here's one of those quantifiable metrics that I like a lot. It's the net unrealized profit and loss. Now, why is this metric so important? It's important because everybody has an anchor point, right? When we bought Bitcoin for a certain amount, right? Let's say we bought it at 50K and now it's at 100K. We made our 2x. What that means is that at some point we might consider selling because we want to rebalance our portfolio, right? We also have stocks, we also have gold, we also have property. And let's say we started off with 20% of our net worth being in Bitcoin. When we then double the Bitcoin price, now suddenly 30-40% of our net worth is in Bitcoin. Is it justified to have 40% of the net worth in Bitcoin at those elevated prices when the market is heated, when in turn we thought that 20% is a good allocation when the market is not heated, right? Because normally we should be holding more, relatively speaking, to our net worth when the market is not heated, and we should be very cautious with our allocation when the market is heated, right? So ideally we maybe have 20% target allocation when the market is not hot, and maybe only 10% target allocation when the market is hot. But automatically, because the price is going up, we are already moving from 20% to 40%, but we should only have 10% at the top. And so the net unrealized profit and loss is super important. Everybody has their own reference price and everybody feels comfortable with a certain amount of risk. And as the price increases, of course, we do have more risk, because first we've got more exposure, but also second, there is more risk of potentially seeing a retracement. And so have a look at this. Whenever the net unrealized profit and loss was in red, it was a very good time to sell, because subsequently the price can easily fall by 70-80%. Currently, we are not yet in the red zone. But unfortunately, this chart here has also not updated in the last 24 hours. Still, if we are at 103K in this chart, we're probably still not reaching the red zone over here. So this still looks somewhat okay. There's another interesting indicator. It's a combination of various indicators. It's called the CBBI. So that's on cbbi.info. And it combines various metrics. We've got the Pi cycle top indicator. We've got the realized and unrealized profit and loss. We've got the Rodel ratio. So that's the trading of short-term versus long-term Bitcoin, etc. There are several interesting metrics in here. And it also tends to peak out very nicely when Bitcoin tended to peak. And currently we are not at extreme values just yet. We are not dirt cheap, but we are also not yet extreme hype level kind of prices. Now let's work with this scenario, right? Let's say you had 20% allocation. Let's say you are now at 40% allocation. And actually you would feel way more comfortable only having 10% right now, because in the end, if now Bitcoin was to drop by 30 or 40%, you'd really not enjoy that. If that's currently your situation, there's really no shame whatsoever to take some profit. But let's have a look at the potential downside, even if we stayed now in this bull market. So let's say we continue to rise. How much volatility can we expect? Have a look at this chart here. This is the stablecoin dominance. So instead of looking at the US dollars, right, the charts that we looked at before, we're looking at the fraction of the crypto market that's currently in stablecoins. That's currently at 5% and it's at the top at 19%. So a lot of the expansion of crypto prices was not just money flowing in from traditional finance, it was also the existing stock of stablecoins getting deployed. So this is the quickly accessible money. And when this is peaking, crypto prices tend to be very, very low. When this is low, crypto prices tend to be very, very high. And of course, this cannot go to 0%. And the lower we go, the more risky the market gets. And so this already looks quite dangerous, right? This can justify a potential rally in the stablecoin dominance by maybe 70%, which then also, of course, causes crypto prices to drop quite significantly. So let's have a look at this point over here, the 6th of September 2024. The Bitcoin price at the time was at 54K. So the Bitcoin price would probably not drop all the way down there just because the stablecoin dominance is going up. Because as I said, there is more money flowing in, but it could easily drop to 60K, maybe 70K. But let's have a look at more details here. Now it's always the same game, right? Whenever we hit new all-time highs in Bitcoin, people are speculating how high can we go? Are we going to hit the 200K, the 300K, the 400K? What is realistic? And then there are charts like this, which unfortunately I believe overpromise. So this is a logarithmic regression chart, and it tries to encompass Bitcoin's price movements over time. A very long-term chart starting in 2012 when Bitcoin was just a few dollars all the way to today. And this here would imply that Bitcoin could rise all the way to 750K. But I have got my strong doubts, because when we look at this at a bit more detail, we can see that initially we overshot the upper bound, then we just hit the upper bound, and recently we did not hit that upper bound. So who would say that it's realistic that we hit the upper bound again, right? Maybe it's more realistic that we only hit yellow, or maybe just light green. Now, instead of going all scientific with logarithmic regressions, etc., we can simply just draw curved lines. And interestingly enough, those curved lines fit the Bitcoin price historically also very well. I'd say they fit the Bitcoin price better than the logarithmic regression. So this here is the bottom line. It's just a random curved line. There's nothing scientific about it, but see how nicely the price bounced off that floor. Now, where is currently that floor? It's of course way down at the bottom at 29K. Now, am I saying that we're going to drop to 29K tomorrow? Of course, I'm not saying that, but it's simply just the long-term trend. At some point, we might see more volatility, maybe just because we go sideways for a while. Now, we can do the same exercise for the tops over here. We can connect those tops. And again, notice how we tend to be much longer at those lower prices than we tend to be at those higher prices, right? Exiting is much harder than entering, because we tend to be at low prices for a long period of time, and we tend to be at high prices for much shorter periods of time. And so have a look at this line here. It connects the tops pretty well. Again, it's just randomly drawn. There's nothing scientific about it, so I'm not claiming that it is. But it's one of those approaches that historically worked well, right? It's better than just random gut feel, I guess. And so where is that upper line now? Let's have a look. Let's zoom in. It's currently at 127,000. Do I believe that it makes sense to take some chips off the table? If you're currently over allocated to Bitcoin and half of your net worth is in Bitcoin, and you started with 5% of your net worth being in Bitcoin because you bought all of your Bitcoin very early on and you've seen these multiple X returns. Do I believe that it makes sense to sell at those 28K? Yes, I do believe this is pretty smart. It's not a popular opinion, and everybody says we're going to go to 250K and to 500,000, but it's all about risk management, right? It's about, can you digest a potential drop? Are you okay if we drop by 20, 30, maybe even 40% on the way up? If you're okay with drops of 70%, then by all means just hold forever, right? This is the Michael Saylor approach. You simply just hold through all the bear markets. That works. But on the other hand, if you want to ride the wave somewhat, if you want to buy lower than most people, if you want to sell higher than most people, then you have to sometimes take advantage of those kinds of higher prices. Now, here's what I believe the current realistic short to medium term risk for Bitcoin actually is. The answer lies in this line in turquoise over here, and it's currently roughly 32% from the current price. It's $69,000 per Bitcoin, and it is rising every day. So you might be at 70K tomorrow and 71K the day after tomorrow, etc. But this is roughly the kind of drop that can still happen even if we stay in a bull market. Now, what is this line? It's the 120-day simple moving average. And this is not an arbitrarily chosen number. It's actually a moving average that historically worked the best for Bitcoin. Again, I like to use approaches that historically worked well. So I've backtested all kinds of moving averages all the way from the 2-day to the 200-day, and the 120-day simple moving average tended to work the best. That's for the data series of August 2017 to July 2024. I haven't updated this backtest for a while, but if you take that moving average, then you outperform buying and holding Bitcoin by a lot. So buying and holding Bitcoin is just here in white, and the performance of that backtest is here in turquoise. Now, this is a linear scale. We can also have a look at this on a logarithmic scale. A very nice constant outperformance with way less drawdowns than buying and holding provides. Now, we do both here, right? We go long whenever the price is above the moving average, but we also go short whenever we are below the moving average. So we tend to make money when we are crashing and the price is below the moving average. But that's basically the fundamental thesis of the strategy, right? We want to buy whenever the price is above, and we want to short or sell at least whenever the price is below the moving average. So I believe we are still in a bull market as long as the price stays above that 120-day simple moving average. And unfortunately, it's currently at 69K. So if your allocation to crypto is so large that you would not hold or you would not buy better even when we crash down to 70k or to 75k. If your portfolio gets completely crushed and you feel completely depressed just because we go down from 100k to 75k, then you are over allocated. Then you should take profit today. Again, the metrics do not indicate that we are going to crash tomorrow, right? We are not at peak net unrealized profit, but we are higher than usual. Now, all of the indicators I talked about today, all of the back tests, etc., I've got way more detailed content on that in the premium membership of this channel. So there's a tutorial video, my favorite crypto macro indicators. It's one of over 100 premium tutorial videos. Feel free to check that out. But there's also regular updates regarding my view on crypto, something similar to what you've watched today. That comes out every 3 to 4 days for premium members exclusively as well. And for the back tests, things like this, we don't just have tutorial videos, you can also download the actual Excel sheets over here in premium. We're not just backtesting moving averages, we're also backtesting the RSI, we're backtesting all kinds of indicators. There's a whole community revolving around all of this. We've also got strategies like wallet tracking. So we look at other influencers, what are they buying and selling, and we discuss those individual altcoins in dedicated chats as well. And so I'd like to invite you to reinvest some of those profits you've just made by trying out premium. There's a 1-week money back guarantee. So currently it's $165 per month, but you can message me within the first 7 days. If you do not like premium, I will refund you 100%. There's really zero risk for you. Hope you got some value out of this video. Feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.